Welcome to the next trade for April 12th. I'm Dave with Lighthouse. Let's get into this. We always like to start with a teaser, something we're going to unpack further in the minutes ahead. In this case, this isn't a teaser per se. This is something we're self-congratulatory calling Victory Lap. It's a quick look at what our analytics have had to say over the first 3.5 months of the year. And there's a reason why we're looking at this now. We'll get to it in about 20 seconds. But first, Jan WASDE, we said ahead of time in our daily emails and our market thoughts it was going to be bearish. Coming off of it, we hit a buy signal, said this looks like a major lows in place. Next trade segment right around here, corn's about to break out higher, all grains, which they did. Right here, next trade segment, hey, we got a sell signal. This checks all the boxes for a major high. Bunch of selling a grain in this window for us. Daily email 2 Mondays ago, corn's about to break out lower, which it did. We've fallen sharply since then, and now at the end of this past week, we got into a buy signal on corn. All that just to say that this is not stuff we're recreating. This literally played out in front of you if you're consuming our content, if you're having conversations with us, etc. This is all easily verifiable. You can go back and look at each of these instances. So this content has value. It's insightful. It's useful. It's part of how we give you the best service that we can, and we want you consuming it. Just in this world we live in, it's becoming harder and harder to get emails to go through to the people we want them to. Even text messages are becoming more hit or miss. Just a reminder, Lighthouse Client app is now in its new version out for you. It has been since the first of the year. It has all of that content. If you go in, just click into it, you go to market analysis, and you can find commentary, market thoughts, next trades. You can scroll through all of this easily, and you can cross-reference way easier than you can keeping track of emails. You can listen to something I'm saying on this commentary or whatever. You can check what a daily email had to say about it. You can refer to older daily emails. You can certainly go back and catch the latest next trade segment, etc. So just as a place to consume this insight, like this victory lap we started the session with, our app is the perfect place to do that. Our app also has all of your contract data, your projected average prices, soon enough, all of your ticket info. You'll have a one-stop shop for everything about your farm, everything from the analytics to make a decision, to the trade that was the decision, to all the details, to the tickets, to the contract balances, the settlements, all of that. So if you're not on latest version of this app and getting comfortable with it, make sure we do that. That's just tremendously valuable. All right, let's talk grains here. So we had a couple things for news this week. One of them, kind of a flyover, as it typically is, the April WASDE. No changes to domestic corn and bean balance sheets. No real significant changes to world balance sheets on corn and beans. May will be where we get our first look at new crop stocks, carryouts, just balance sheets and whatnot. So the May WASDE is a big one, but no changes on corn and beans as expected. This didn't really move the market. Wheat globally was actually quite bearish, but just because of a major change to consumption in India, which we have a hard time tying those threads together. But officially, wheat was bearish. The other big thing, of course, is we're all learning together what the word ceasefire means. Right away when this was announced, Tuesday night, crude oil plummeted, grains plummeted in concert with them, and then crude oil quickly stabilized and pared back about a third of its losses over the balance of the week, as there still appears to be all kinds of uncertainty. And as you head into a weekend with big negotiations to try to further get a lasting ceasefire beyond just this 2-week deal. So, but certainly from the standpoint of what was announced, immediate ceasing of all hostilities, Strait of Hormuz open for all ships to pass through, et cetera. Nothing that even resembles that is occurring at the moment. So a lot of fragility here to this ceasefire, to that overall situation. And one thing that persists is energy prices are way higher than they were before this conflict. And that looks like it'll continue to be the case almost no matter what happens through these weekend talks and in the short term in the days ahead. So how does that tie into what grain prices did last week? Looking at weekly changes, week 4 losses for corn, lost 11.25 cents, closed at 441. It did get through this 445-ish support area that we like. Part of it is because it gapped through it Tuesday night after the ceasefire announcement. So that actually pushes you down to the next major support, which is this 435 area. You got all the way as low as 438 ahead of that. And importantly, you're now trading lower than you were before the Iran conflict started. So that kind of frames up you're back to corn price that seemed to be fair value before crude oil and energy prices rallied by 50%. So that's just something we need to keep in mind. And that's with a whole growing season ahead and only 3% of the U.S. crop planted. So that's where we're at on corn. If we look at soybeans, here's how this looks on a weekly chart. You ended up gaining 12 1/4 to close at 11.75 3/4. You're still basically doing the same thing. Tuesday night, you traded sharply lower. We liked that. That appeared to be confirmation to us that soybeans were breaking out lower. And then you immediately snap back and traded all the way back to the top of your range. And when all the dust settled, you're still roughly 15-cent range, absurdly narrow, given the magnitude of all that's happening in the world around us. You're still set for a major, significant move breakout. And we'll talk about more of that when we talk about what happens next here. So, and then there's wheat. Wheat is in the process of teaching us, your author of this commentary, an important lesson. You're down 35 1/4 cents right now. If you look at that for the week, if you look at on daily chart, you're all the way back down to 611.5. Again, same thing. You're back. You're not quite lower than the start of the Iran conflict, but you're basically back to within range of these highs, these mediocre highs that we had prior to Iran spurring in a bigger run. So there's a couple things with this. We highlighted a week ago, continuous chart for wheat, how you'd traded up to 2-year highs, how it looked like it was part of a much more significant move. That appears pretty invalidated here. You didn't get above your spike high from the 9th, and you've obviously just completely collapsed in the wake of this. Also, just a punishing thing on our end. You had a sell signal and a very bearish classifier right here. Just another case where the analytics outperform the fundamentals, or at least our take on the fundamentals, almost every single time. All that said, you're back down now to levels that when you start talking pre-Iran prices, where you should find support here. I mean, this is certainly way past levels that make sense to sell. So let's take stock of where we're at now. You've got a potential ceasefire on Iran. Probably more accurately, though, something we talked about early in the first week of this war is grains will trade this. They will build premium in this for the first week and a half, and then they'll largely not react in a big way to the war news. And that's been the case. I mean, your high came 10 days into that conflict. You haven't gotten close to it since, and you're trading lower. So that's something. At the same time, it still lingers as these prices fall. At some point, it becomes supportive. At some point, corn is so cheap relative to crude oil. Fertilizer prices are so high. Margin structure is so poor that I think you definitely moved your floor up on grains in this conflict. I don't think there's any question of that. But then let's look at the more normal grain stuff as we go into April here. So if I can find the stuff I want to find, just noting, this is probably not the best chart way to display this, but this is your seasonal on corn. Soybeans and spring wheat, at least, would be pretty similar. You can see your tendency for new crop to actually rally decisively. This is about a 17-year seasonal that we maintain internally, to rally decisively from where we're at now into May, early June. The last 2 years were very unique with and last year especially, no seasonal rally at all. Normally, if you knew nothing else about grains and you said, I'm going to buy them on April 11th and I'm going to sell on June 13th, you'd have an overwhelmingly high likelihood of having a profitable trade. So your seasonal is friendly on grains. Here's probably the biggest problem, and this is what we've been highlighting for the last few weeks. Your managed money was already net long going into the Iran conflict, and they built up a huge near record net long position by the early days of this war, and there's just not enough buying power to keep it going, and there's still really long. I think the next commitment of traders would show this pared back some, because you'd have the wheat and corn losses from the balance of last week that's not in here, but you're still going to be quite quite long overall. So this limits some ability basically to keep rallying once you're this long. It has to be a 2010, 2020 type scenario, just a structurally runaway bullish change where you are pouring coal into that fire every single day, just objectively new bullish news. Otherwise, you don't continue to rally once managed money gets this long. So we've got a strong seasonal. We've got managed money at a high level that probably mutes out the potential of our gains and whatnot. And then just cash markets, at least for corn, continue to not show much concern. Actually, corn and soybeans spreads are incredibly wide. You're not struggling to supply nearby at all. You don't really have a South American weather story, and you don't have a U.S. weather story yet. So you don't, other than this energy inflation story, you don't really have a lot to go on for grains right now beyond just the normal strong seasonal. So at least as far as what to do in the next week, again, what does the guy do in the short term? If we look at our analytics, corn signals down to 18. You're getting your market gauges to back off. You've got a friendly seasonal. Price to stocks to use has come down some. Range momentum are backing off. The only real burr in the saddle, classifiers still pretty negative at the moment. It's still expecting 11.5 cent 20-day change. So beyond that, but basically on corn, you're past the point of selling for sure. These analytics don't support selling. This is actually a nice spot to re-own some hedges. If you were an aggressive hedger in that early to mid-March range, or just period, or you're wanting to think about the grain that you're going to sell next, this is a nice spot to step in and re-own corn. All else equal, I wouldn't mind seeing this classifier not quite so negative before stepping in. But these analytics definitely support re-owning. They don't support selling at all. So wheat, day one below the buy threshold for wheat too. Maybe we're finally done being punished. Our classifier, if there's not enough data points, it kicks out the returns, but we still see them behind the scenes. Classifier is extremely bullish for wheat here, a very high expected change. It's just not a lot of data points. You're getting to where range, seasonal, price to stocks to use are all in the bottom half. Same thing. This is a wheat chart doesn't, no matter what we should have done 2 weeks ago, wheat's in a classic spot here of don't compound your first mistake by making your second one. You don't sell, whether you sold wheat on this sell signal or not, or this one, you don't sell it here. You're back to analytics saying this is actually a strong buy. So those are pretty cut and dry. That's the nice thing about the markets. They'll give you a chance to make a decision, and either you do or you don't. They'll give you a chance to make another one down the road. Wheat and corn are pretty easy decision. When you lay that out, they don't support selling, for this week, till our next conversation, etc. Soybeans a little more of a mixed bag here. So soybean classifiers mildly negative. 63% of the time it's traded lower, pretty small expected change. Signal's still up at 60. You've got 4 of 5 market gauges above 60. Only your seasonal change is not. And again, you've been consolidating in this really tight range for quite a while, and you're clearly going to have a breakout. Here, our take on this, just what the analytics and the fundamentals tell us today, is simply this. This is certainly an aggregate bearish fundamental case. You're clearly going to break out lower. Clearly, soybeans are holding significant premium still on the expectation that this May China discussion is going to bring in more purchases and whatnot. And if it doesn't, you're already trailing the pace you needed just to hit this year's target, even after the small revision that was made last week. So you're set up for bearishness fundamentally there. Also, I think it stands to reason pretty likely your soybean acres end up higher just with what's happening on corn price now, fertilizer, etc. And U.S. soybeans are comically overpriced in the world market right now. So soybeans are resilient. Crush demand is incredibly strong. This sure could look wrong in the days ahead, but this is still a spot we would say if a client, if a person listening to this is not current on their soybean hedging, these analytics still say do this. The nod in all this is probably more of a flexible type hedge that makes sense, something with a floor and a ceiling, something that says, hey, if we break out of this range, I'm going to catch the downside. If we don't, if we break out lower, if we break out higher, I still have my upside in hand and whatnot. But that's our take on this, right or wrong, is that ultimately this breakout will be lower, and that regardless, these analytics support hedging if you haven't already for this spot on soybeans.